Okay, for this video I wanted to cover IRS Form 1099 INT, but specifically I wanted to focus on this Box 2 amount, early withdrawal penalties. So if you see an amount in Box 2, that would generally occur if you were invested in a CD during the year or certificate of deposit, and you decided to withdraw funds before the term expired. So for example, if you bought a 6-month CD and you took the funds out after 4 months, the bank likely assesses a penalty. So we'll go over how to report the penalty, how it impacts your taxes. I do have a sample tax return here for our taxpayer, John Q. Taxpayer. So we'll go over that as well. And then I do have one slide here covering some of the background on the 1099 INT and how this early withdrawal penalty impacts your taxes. So the 1099 INT, again, it's used to report interest income. And generally, most taxpayers just see an amount in Box 1. So Boxes 1 and 3, those amounts are reported on Schedule B, so that's just taxable interest income. While Box 2 is that early withdrawal penalty amount. So the early withdrawal penalty amount, it is not taxable income to you. It is a tax deduction because you were charged it. And so these penalties are reported on Schedule 1 in Part 2, and they effectively reduce your AGI. So it's a reduction to your adjusted gross income. Now, the 1099 INT is also used to report tax-exempt interest. So that's Box 8, and then Box 9 is the private activity bond component. So those are just reported on Schedule B, while tax-exempt interest, those are not reported on Schedule B. The tax-exempt interest is reported on page 1 of Form 1040. There's a section for tax-exempt interest. And then the private activity bond interest, which is a component of that, is reported as an AMT adjustment on 6251. So now back to this Box 2 amount, the early withdrawal penalties. Again, these apply when you withdraw funds early from a CD, right? And so the bank, before it releases the funds to you, it computes a penalty and it takes that amount out of the available funds and then gives you the difference. Now, again, the penalty varies from bank to bank. Some banks charge more or less. But they're always a factor of the length of the CD generally. So if you have a 3-month CD versus a 12-month CD, the penalty is going to be computed a little differently. Now, the amount of interest that you earn on the CD, that's still interest income taxable to you, right? Because it's accruing on the CD. So it's simply interest income that's included in your gross income, right? That's IRC section 61A4. And now the penalty amount is deductible. So section 62A9, where we compute our AGI, right? 62A9 specifically carves out a deduction for penalties on early withdrawals of these types of products. So if you do have a penalty, you can take a deduction for that. And we'll have a look at where that's reported on the 1040 in a bit here. So here's the fact pattern we've got. We've got John Q. Taxpayer on the 1st of January, puts $8,000 into a 12-month CD. Right, the annual percentage yield is going to be 4.5%. So if John holds this thing the entire 12 months till maturity, he's going to have $360 of interest, and then he'll get back the $8,000 as well. Now, before the end of the year, John decided, well, I need some emergency cash, right? And so he knows that, okay, the terms for the early withdrawal penalty is going to be $25 or 3 months of simple interest, whatever is greater. But I really need the cash, so I'm just going to have to bite the bullet here. So before the end of the year, he takes the funds out of the CD early in August 2022. The amount of interest that was accruing on the CD and was the amount leading up to the withdrawal is $238. But because he withdrew early, the bank charged that early withdrawal penalty, and the amount that they computed was $88 for that early withdrawal penalty. So he gets a 1099 INT with all these amounts. So now how does he report on his return? So if we take a look at his tax return, the first thing to note is on Schedule B, right, the interest from the bank is simply reported here, Schedule B Part 1. So Box 1, we have interest income, $238. That's fine. That's simply reported here from the local bank, $238. So that's included in his gross interest income. Now, the early withdrawal penalty in Box 2 of $88, that's reported on Schedule 1. So Schedule 1 are adjustments to income. Additional income is in Part 1. Adjustments to income is found in Schedule 1 Part 2. So if we go down to Schedule 1 Part 2 where we have our adjustments to income, you'll note that there is a separate line item here, Part 2, line 18, penalty on early withdrawal savings, and there we see our $88 figure. So the amount of adjustments, the reductions to John's income is going to be this $88 penalty amount. So if John takes a look at his 1040 here, right, we can see he's got his taxable interest on 2B there, that's fine. And then we have the adjustments to income flowing through from Schedule 1, $88. So John can reduce his income, right? So his total income there, $105,293. Subtract the $88, and now he's got adjusted gross income of $105,205. So the early withdrawal penalty, one of the most common things I see is this is often thought of as income, right? I don't know why, but for some reason, a lot of recipients get this and they think, okay, that's some kind of separate interest that I need to report as income. No, it's a reduction, right? So that $88 penalty is a reduction to your adjusted gross income. And again, it's reported on Schedule 1 in Part 2. All right, so quick and easy video there. I hope that was helpful. If you have any questions, feel free to leave a comment below. And I look forward to seeing you again on the next video. Thank you.